You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music can mean but one thing. We're coming at you here on Education Wednesday, live for all you pro folks for another episode of the premier options education program. Yes, it is time once again for Options Bootcamp, the show that resonates around the globe, from here to India to Denmark and all points in between, stopping by Germany for Oktoberfest with Dan and some of the listeners there. All sorts of fun. We love you all, whether you're domestic, international. We love you all out there. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging these days. A couple of things to remind you of at the top of the show. First off, if you like what you hear, however you get the show, whatever platform it is, whatever it allows you to do, a like, a comment, a star review, whatever it might be, all that stuff does help at the end of the day for new folks in Asia and the U.S. and Europe and everywhere else to discover the show and continue discovering the show. And then, of course, if you want more in your lives, and who doesn't, you should be subscribed to our full network, and you should also check out theoptionsinsider.com/pro is the place to go to get additional content. You can come join the live and heckle Dan during the show. You can get free prizes, all sorts of cool stuff, options oddities, talk about a whole bunch of great and these days, very timely flow. Some of that actually made it to our question of the week, so we can talk about that in a little bit. All sorts of fun there. TheOptionsInsider.com/pro is the place to go. Just like our friend here on the review side did this week. I'm not sure where he's from, but his name is Jensen. Jensen says 5 stars, great info, and straight to the point, loving it all. Well, thank you, Jensen. We love you for taking the time out there to rate and review the show. Hopefully you also love my black-hatted compatriot, my partner in crime, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. What do you think? You think Jensen also appreciates you, sir?
Yeah, I think he appreciates me just as much, if not a smidge more than you, Mark.
Well, I never got invited to Oktoberfest, so I don't know. I'm just saying out there. So intriguing. Yeah. So even though I think you said you were going there, which is why he made that offer. So I'm just putting that out there. I guess if I was going, I would be invited too. But alas, I am not. Instead, I'm only going, sir, to the Options Bootcamp Drill Instructor Proving Ground because it's time for a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, Mr. P. It's that time, sir. It's where we take on all comers and we wrestle them to the ground and hog tie them. And then if we have time, we also answer their options questions. Are you ready, sir?
I am ready, sir.
Let's set the tone with the much anticipated, much beloved Passarelli/Market Taker question of the week. What you got for us, sir?
Well, I was asked this question recently, and we talk about it a lot, but I actually thought of another answer that I think maybe we haven't talked about So I thought I'd sprinkle it in this week. Someone asked me, are there any drawbacks to cash secured puts? And, we've talked many times on the show about, how they work and benefits and detriments. But there's sort of one other, and I won't necessarily call it a drawback. I mean, it can be. It's definitely, I'll definitely call it something to make sure you consider, is that if you're trading it, and particularly you run into this problem in an IRA where you can't, buy stock on margin or anything like that. If you sell a cash secured put, if it's truly cash secured, you secure the potential future purchase of the stock, like if you get assigned. So you basically take the strike price, multiply that times 100, and basically that's what you need to have in cash. And so, you could be sitting with an account and have $30,000 in cash, but not be able to roll your covered calls because you don't have enough cash. That cash ends up being earmarked for the potential purchase of the shares that are a potential eventuality resulting from the cash secured put you have. So that ends up, it ends up in some cases being this extra potential drawback. I think drawback is a pretty good word. And so, you really have to consider that. You could own no stock in your IRA, just sell a ton of cash secured puts and be sitting on a couple $100,000 and all that cash is tied up. You might not be able to buy a $2 call. So it's just another angle to consider that I don't recall ever talking about on the show before.
Yeah, the other potential downside, which we were just discussing in our pro Q&A, we had the folks from Interactive Brokers on. We got a question, which is worth discussing here really quickly as well, about, who gets the interest when you sell that cash secured put. Because we always talk about there is an opportunity cost. That's the money you put aside. If you have a good broker, the cash secured money, you should still get the interest on that cash at the end of the day. And we checked, and the IB folks, they do pay you the interest on that margin balance. So it's not like you're selling a put to collect income, but then losing the interest on that cash balance, Dan, which would kind of negate the whole point of doing it. So just something to bear in mind and keep an eye on with your broker. Check that and make sure you don't have a broker who's maybe trying to pocket that little bit of interest, in which case, if you're selling puts for income and then keeping some cash reserved to cover that, and then they're taking the interest on that cash, you may want to check and indeed move to a different broker. So there are some potential hidden pitfalls. Unfortunately, that stuff's going to kind of vary by broker, which is unfortunate. You think it should be straightforward. It's your money. You get paid on it. But c'est la vie, particularly if it's purely cash secured, you're not using really any margin at all, then it's really just a strange thing. Speaking of strange things, Mr. Dan, I mentioned earlier our unusual activity that we profile on our Options Oddity show every week for our pro members. There's been some interesting stuff rolling through there, Dan. We were kind of debating recently on that show, like, which ones do we like the most and or least? More like the least. But some of these are just weird. So we put these out there. We said we've seen a lot of interesting, in quotes, options paper lately. We can't decide which ones we like the most / least. Really least. So we're going to let you folks decide. Gun to your head. You had to buy one of these. Which one are you going to rather buy? Well, we've got first, Dan, we've got the Nikola. You know Nikola, one of the Littler EV makers out there. The Nikola AUG $5 calls, so 5-strike calls for 37 cents. The stock trading right now, listeners, $2.50, and I think it was a little bit below that when we profiled these. So it's got to pretty much double in a month by August expiration. We're recording this close to July expiration, listeners. Or my personal favorite, the Rivian August 40 calls for 40 cents. Again, the stock right now about $25, and it's been vacillating in this low to middle 25 range ever since. Obviously, it had a nice aggressive pop, which is why people were all excited about it. But the AUG 40s, that's a ways to go by August expiration. And then bringing up the rear is KDP, so Keurig Dr. Pepper, the October 33s for 55 cents. The stock rallying today, it's about $32 right now. Or other, and you could supply your own. Mr. Dan, if you have a favorite amongst those, have at it. And then B, which way do you think our audience is going?
Well, I mean, I would think that the logical answer would be KDP. I mean, it's the only one that seems reasonably in play with enough time, for it to play out. But as far as Nikola and Rivian, those could be ones, but I would wait until those hit my options rater scanner. Like those have traditionally been in our short squeeze baskets. And I think to go out and buy them now as speculation might be aggressive if they hit the scanner where like all of a sudden there's a whole bunch of retail, buying up those and the stock is rising. If like the perfect storm hits, I'd love to jump on some of those. That would be awesome.
Yeah, it was funny. When we were putting this together, I almost didn't have them include the KDP because I thought it was too obvious, right? I thought the answer was obvious. I liked them when we talked about them on the show. It was all the way to October. It was only $1 and change out of the money, 55 cents. It seemed like a very reasonable call purchase versus these other ones. They have to essentially double in a month. That's a lot to expect from an option in a stock. But, yeah, initially it was 70% for the Rivian, Dan. So the Rivian love was strong. It has mitigated somewhat now, only 55.6%. Love in the August 40s in Rivian. And then 26.7, so KDP starting to get some love now, number 2. And then Nikola bring up the rear, 15.6. It was reversed. It was Nikola above KDP for a while there. And then a little over 2% saying other. So there you go, Dan. Our audience still hardcore into Rivian, sir. Does that surprise you?
Yes and no. Actually, I'm curious, though, how many of those KDP October 33s traded?
This was last week, so on Friday on our show, I'll have to go pull it up for you. You like that trade, aren't you? You're looking into that. See?
Yeah.
You need to listen to Options Oddities, sir. You got all the good stuff. Because you asked so nicely, I will pull it up for you right now. It was about almost 5,000 of the OC33s for 55 cents. Actually, no, I take it back. That was the first block that we noticed, a total of about 20,000 traded on the day. So people liked these. The stock was $31.41 at the time. I'm guessing the stock has rallied to about $32, so you're not going to get them 55 cents anymore. Probably closer to 65, maybe 70. That said, sir, they seem to be paying off, at least so far.
Yeah, their mid-market's 80 cents right now, 14,000 open interest.
Yeah, there you go. So maybe it took some off already. But yeah, that has been a winner chicken dinner, as the kids say. Do the kids still say that? I don't know. I'm going to say they say it. In touch with the pulse of Gen Z here on the show, Mr. P. All right, let's keep rolling. Our question last week, sir, was when VIX hit 12 in 2017, it kicked off a dark period for the options market. Will we see a repeat this year with lower volatility leading to lower volume in the second half of 2023? And we gave you two choices. Yes, low VIX kills volume, or no, 0 day will come to the rescue. And Dan, the yeses took it, which in this case is actually negative. Yes, low VIX is going to kill the volume. Nearly 70%, 68.9% choosing that. Only 31.1% saying no, volume will remain strong. So Dan, what say you, sir? Are the beers for options volume coming out in our audience, sir?
Well, I mean, apparently they are. And there's probably a little something to that, but I don't know, man. I think that traders in the options market have like steadily been getting savvier for the last like at least 15 years, maybe 20 years. And I think people figure out how to make money in the new volatility regime when it changes, you know? I mean, when volatility was really low before, people were making a whole bunch of money selling volatility, and then volatility exploded, and, you know, everybody was worried, oh no, you know, is that gonna, you know, am I going to be able to trade? And a lot of people stopped trading, but volumes are up. So I don't know. I mean, the intuitive answer is that, yeah, it could kill volume, but I don't know. I don't know if it'll kill volume. I maybe I'm just hopeful. I don't know.
We're nothing but rays of sunshine here on the show at the end. Yeah, I'm with you. I would vote no in this one as well. Nothing has seemed to be able to derail the options bull right now from a volume perspective. Could a protracted 12 and below VIX do that? Potentially. We've seen it happen before, but there are so many other things happening in the options market right now. It's a different market than it was even in 2017. So many new people trading options and listening to a show like this, Dan, that it's hard to really put into words. I'll give you an example, Dan. How long on this show have we said that IB not a good broker for beginning options? They don't even want your business, right? How long have we said that, right?
Yeah, for a long time.
Yesterday on the show, we were talking with them on our Pro Q&A, and they have a new options campus initiative specifically for the basic, because they even realize, hey, that's where all the money is these days. That's where all the growth is. That's where all the people are. The people listening to this show, the people who are, what's a call? What's a put again? If you're not catering to those people, you're missing out on almost the lion's share of the business these days. So even IB, they actively discouraged your business, listeners. There's so many of you beginners out there now that they even want you. So that just shows you, Dan, the worm has turned. If Petterfee wants your money, then the worm has turned, sir. Let's keep on rolling here. Let's get out some of your questions. If you're listening live, want to get some in, we'll be nice. If you're listening on Twitter and you happen to see that we're live and want to send one in, we'll be nice to you folks out there. You got to get them in quick, though. All right, let's go out to Seymour first. Seymour says, here's one that you guys didn't include in your Strats for Busy Traders episode. Yeah, that was our previous episode, listeners. Hopefully you checked it out. An intriguing topic. As I said on that episode, we're probably going to come back to that, and looks like we're coming back to it right now. He says, I like to use stock substitution over the long term. I buy a 6-month in-the-money call, sell the underlying, and let the call ride. The most work you have to do is set a stop price for the call. Other than that, it's pretty much set it and forget it. You like? Yes, I do like Seymour. And, it's funny you mentioned that because we had that in our initial document, and then I kind of pulled it out at the last minute. And I'll tell you why. Because the way we traditionally discuss stock substitution here on this show and on the network, if you listen to Brian's OPR show, he calls it the fig leaf on that show. And that's kind of the way we usually approach it, which is a little bit more active than what you're talking about, which is why I didn't include it here. You're right. The traditional just kind of buy the call, set it and forget it approach, come back in a few months, see how it's doing. You're right. That very basic approach is decent for your busy trader. It's very much analogous to buying and holding a stock at that point. And you're right, anyone could do that. So that limited use case, I agree. When you get a little bit more active, though, you get into the fig leaf, which is what we tend to advocate. You're now trying to offset some of the outlay for that call with selling another quasi-covered call, which is why sometimes people call this the synthetic covered call, or as Brian calls it, the fig leaf, because you're partially covered. You're not fully covered. You don't own a stock at the end of the day. So maybe in your example, you'd buy a 6-month call, and then maybe to keep things simple, you'd write a 1-month out-of-the-money call against it. So now you have a longer-term in-the-money call, and you have a short-term out-of-the-money call. So you have effectively legged into a diagonal now, and you're hoping, obviously, that call expires worthless. You get to rinse and repeat and keep doing that month after month. And over 6 months, hopefully, you've offset some, if not all, of the premium of that call. And by the end, you got a nice free roll of the dice there. So that's the way we tend to set those up, which is why I pulled it out of our set it and forget it for someone who's busy. That may be a little bit too much busy work for them. But that said, if you're just doing it the way you like, Seymour, then yes, that would qualify under the set it and forget it. Dan, what do you have to say for Seymour and his addition to our set it and forget it option strategy guide? Are you down with stock substitution being in there? And what is your flavor? Do you prefer the straight up version like Seymour is talking about, or the kind I mentioned, more of the fig leaf, the synthetic covered call approach, sir?
I like them and use them both. But they're niche strategies. Like, I feel like if your normal, long-term bullish momentum thing was to buy in the money 6-month calls and just let it go, I think if that's your normal thing, that's what you always do, you're probably going to lose in the long run, because you're just like, your plan is to give up all that time premium. So I don't think that that's like a strategy that you just keep milking and milking. I think that that's a strategy that serves a very unique purpose, and I've used that before, but not often. Only for a very unique purpose. The poor man's covered call is what I'd go as far as calling it, diagonal, call diagonal. I like that one too. I particularly like that one in, I refer to it as cheaps and deeps, where the stock gets really, really cheap. It just sells off like 50% or something. Front volatility gets jacked to the moon, and you buy an in the money longer term call, sell a shorter term call. Basically, the plan is, I want to see this stock grind higher over the life of the long call, which is 6 to 18 months. And I'm okay giving up that time premium because I'm going to make it up on the overpriced implied volatility in the front. So that's when I really like that, the call diagonal.
Interesting. You're right. Lots of names for it. Poor man's covered call, synthetic covered call, fig leaf, many different ways to describe the same thing, but all of them different flavors of that same ice cream there, Seymour. And you're right. It could be included. It depends really at the end of the day how active you want to get with it. That really determines how set it and forget it that strategy is. Let's go out to this next one. This comes from Flyer. That's one of our pro members, I believe. And he's asking about knockout collars. He says, I've been hearing more about knockout collars lately. I've never actually traded one before. Is this a strategy that Dan uses? What is his typical use case and setup for them? Thank you. Yeah, we've been talking a little more about knockout collars on the network. I blame Uncle Mike for bringing him up a couple of weeks ago, I think on the Option Block show. But Mr. Dan, this question is for you, sir. Are you a knockout collar fan? And if so, why do you use them and how do you set them up?
I think this is one of those nomenclature out trades here. I don't know that terminology. Maybe I have a different terminology for it. What pray tell does Uncle Mike, the guy who still owes me $5, refer to those as?
Is it up to $5 now? Have we escalated? I thought it was $1. Yeah, you're right, but it has effectively matured. We do have crazy inflation. So I'm guessing from your comments, sir, that you're not a huge knockout trader, sir.
Oh, so it's an actual knockout option?
Yeah.
So like a flex?
Or you can set it up as a collar as well. Yeah.
Oh, yeah. I never really traded one. I don't know. I can definitely see some benefits to it. Yeah, I got nothing to say about it. Sorry. I'm not just going to, ramble. You
are known for a good ramble.
I haven't used them today.
Yes, interesting stuff. Flyer's been on about these. He was asking about them yesterday, too. Good thing, Flyer, is that Uncle Mike just did a whole video series on these, and he also talked about them on the old Option Block show. So if you want more info on those, check those out. I'm with Dan in this sense. I don't really trade a ton of knockout collars. I don't have a good use case off the top of my head that I recently had for these. But this is Uncle Mike's baby, so I encourage you to hit him up or check out our show, listeners, the Option Block. We do it every Monday and Thursday at noon Central. Of course, if you're listening to the full network, you'll get it on demand on the podcast feed there. And you can check it out for yourselves. Just go back about a week or so, and you'll hear that segment. The educational segment on that show is called the Strategy Block. All right. Let's keep on going with some strategies, Dan. Let's go to D'Angelo. He or perhaps she wants to know, is there ever a time you would want to trade a calendar spread when you don't think the underlying is going to sit still? All right, interesting. Because he's right. That is the kind of initial use case we always talk about, Dan. You don't think it's going to go anywhere for a while, so you buy that calendar spread. But there are other use cases, Dan. Mr. D'Angelo, perhaps Mrs. wants to know, what is your use case for a traditional calendar, but you don't think the underlying is going to sit still?
Yeah, so I did a workshop on this in Sonoma. What was that? Last month, I guess it was, on directional calendars. And those are often one of the most underrated strategies there is. Some directional time spreads, you look at them, it's like, okay, fine, directional time spread goes to the strike, whatever, risk reward, yeah, it's fine. But you can potentially construct some of these, especially if they're pretty far out of the money, to have a massively better risk reward. And, those of you who really look at alpha and like are mathematical, like your Sharpe ratio can just be massively better under certain circumstances. Again, not always. The reason we have a bunch of different option strategies because each one serves a specific purpose. But there are some great opportunities for directional calendar spreads. And honestly, I didn't really learn that until we came out with Time Spread Genius. And I saw some of these. I'm like, why the heck would somebody trade this way out of the money calendar? This is stupid. And then I'm looking at it and I'm analyzing it. I model it out. I'm like, holy crap, this person's a genius. So, yeah, I mean, I'll just leave that at that for now. But, yeah, I like the way you're thinking, D'Angelo.
Maybe he took your seminar and he likes it now, Dan. The only other use case I could think of for that, where you don't think the underlying is going to sit still, but maybe you might want to do it anyway, is, of course, if the term structure is going to exacerbate, right? If you're long 2 months out, short the front month, and you think that spread is going to widen markedly enough to offset anything else that might be going on, then, of course, if you're playing it from a pure vol term structure perspective, then you could be intrigued by a calendar, even if the underlying isn't going to sit. But those are really the two scenarios I would think of where you would want to do a calendar outside of the normal use case, which is, of course, buying 2 months out, usually at the money, selling 1 month out, usually at the money, and hoping the underlying kind of sits still and you get a nice low-cost bite at the apple in month 2 out there. Let's keep on rolling. Let's go to Da Islander Boy. Da Islander Boy. He wants to know, I love all the shows, particularly Options Bootcamp, the Option Block, Volatility Views, and Crypto Rundown. Well, thank you, Da Islander Boy. Right back at you. He said, I know volatility is down in equities, but would you say it's down in pretty much, or would you say it's down pretty much across all asset classes? Well, if you listen to crypto, you'll know that the answer for that show is a resounding yes. Crypto, so your big ones, your ETH and your Bitcoins, they can easily get over triple-digit volatility, especially ETH. ETH is structurally more volatile than Bitcoin traditionally. And right now, they're both in the low 40s. I haven't pulled them up today. They might even have dipped into the 30s now as we're talking. Tell you what, we'll pull up a good surrogate, nice easy one right now. Let's look at BITO. And we'll see the at-money vol in BITO right now is a 42.7. So it's not in the first percentile, but it's in the fourth percentile for the year. So fairly anemic. BITO usually is a pretty good analog for what's going on out there in Bitcoin as well. So if you want to go do some quick analysis of yourself, you don't have a crypto trading account, you don't have access to it for whatever reason, just pull up BITO. That usually will be a good analog for Bitcoin. And whither goes Bitcoin vol, usually goes the rest of crypto vol, outside of some strange aberration. So the answer is definitely yes for crypto. And then, of course, if you check out some of our other shows, like This Week in Futures Options, which I notice is not on your list, the Islander Boy, you should be checking that out. That's on every Thursday. We do that with the folks over there at CME, of course, on demand, after the fact, on the podcast feed. You will see that volatility in a broad swath of asset classes. So ags, as you mentioned, crypto, metals, gold vol is like a 10. So, of course, equities, pretty much across the board. Most of the assets that we talk about on that program, just about everything that trades at CME, the vol is pretty anemic, with a handful of exceptions. Natural gas, it's not quite triple digits the way it was anymore, but it's still probably about a 60 to 70 right now. So it's still frothy compared to everything else, but it is also off its highs as well. A couple of others, lumber, a few other things that are really big movers and shakers out there. But really, for the most part, the answer is yes to Islander Boy. Vol is pretty much down across the board, so bear that in mind when you're out there blasting away at all your premium harvesting strategies. Not getting as much juice for those as you traditionally would. Mr. Dan, anything you want to add for the Islander Boy who wants to know, is vol down pretty much everywhere? So.
No, I mean, as mainly an equities option trader, I think you gave you covered it. I don't think I have anything to add, really.
Dan, nothing to add today. I think we caught him when he's sleepy, listeners. There we go. All right, listeners, that music means we've come to the end of another sojourn through the world of options education. If you folks have questions or comments, you know how to get at us. Of course, all you pro folks, use the members hotline or hit us up via the live chat. And then, of course, if you're listening after the fact, not on the pro side, you want to get at us at Options on most of your major social media platforms. I do believe we're the Options Insider on Threads because they keep your Facebook identity. And so we are not at Options on Threads, but we are on there, tearing it up on the Threads front. And, of course, you can get at us, questions at theoptionsinsider.com. Also works. So if you want to submit a question for the show, you hear something and you're like, I don't get how that works, or maybe could you guys talk about this? Whatever the case may be, those are the best ways to get at us. Smoke signals also work. Dan can see those down in Frankfurt, and he can relay the message to us. But before we go, Mr. Dan, if folks want to reach out to you in ways other than smoke signals, where should they go? What should they do?
Yeah, we'd love to help any way we can, and you can find us at markettaker.com. Market as in stock market, taker as in take what is rightfully yours, 2 T's in a row, markettaker.com.
I know you just came off your big retreat. You got any other fun things in the offing? Any other big events coming up, sir, people can look forward to?
Oh, I mean, the only in-person thing we're planning for is the Mastermind, which is sort of, that's a pretty special event for more advanced traders, but that's coming up in September.
There you go, listeners. You want to check that out? I might even make a surprise appearance to the Master. That's been known to happen in the past. So check it out over there at Market Taker. 2 T's. Don't forget the second T for Theta out there. That's going to do it for us on the live today. I want to thank everybody who joined us on the live side. I know we had to move some stuff around today, but we are back on our usual schedule. That means, of course, back again with our usual assortment of content tomorrow. We, of course, have episode 2 for the week of the option block at noon. And then, of course, after that, 1:30 p.m. Central for This Week in Futures Options. If you have questions about vol across asset classes, that is the show to check out. If you have questions about mostly equity vol, then stay tuned on Friday, noon Central, 1 p.m. Eastern for Volatility Views. And then after that, where all this unusual activity comes from, we have Options Oddities at 2 p.m. Central. That's for all of our pro members over there. And we talk about a lot of great paper. What we had at the top of the show, really just scratching the surface of everything we had to offer there on the show. So if you're intrigued by all that fun stuff, unusual activity, of course, we had a great pro Q&A session yesterday with the folks over there at IB. So if you want to ask more questions, the place to go, theoptionsinsider.com/pro. Otherwise, we'll see you back here next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.